What's going on, guys? This is Vlad, and today we're continuing the series on first presented fair value gap and everything I've discovered so far. So, as we previously discussed, we will slowly build into a model on how to use the first presented fair value gaps in order to find high probability setups. So, after going on the higher time frame and showing you in the previous videos how you can find exact reversal points using these first presented fair value gaps and which fair value gaps to use for your reversal points and reference points, I would like to show you today. Uh, how price travels between first presented fair value gaps. Very important if you want to understand how we're gonna build this model. Okay, you have to know how price travels between these gaps. And it's very simple actually, but before we do it, I want you to listen to a very short extract of one of ICT's 2024 lecture series where he says what the first presented fair value gap is. Okay, let's see it.
And there's my exit right there. It slipped a little bit. 19,930.75. So that's not bad. It's pretty close, right? Close enough for government work, right? But all this drop here, I don't need that. You don't need that either. And then what does it do? It starts to rally right back up. So all these things drawing right back up into yesterday's first presented fair value gap. Drops, rallies back up. What's it working? Yesterday's fair value gap. But now, late in the day, we're returning to first fair value gap. That's true value on the daily range. Your first presented fair value gap between 9:30 and 10 o'clock, you need to know what that is because the algorithm is going to refer back to it. Unless it's a trending day, it's going to refer back to it. I have done so many trades without pointing this to you, but if you go back and look at them, you're going to see that this is a lot of what I'm doing.
All right, now that you saw it, I hope you understand what the first presented fair value gap is. He mentioned that very, very briefly at the end of one of his lectures. And if you missed it, that's what I'm telling you. Always take notes. Lucky for you, I did take my notes, and here it is. The first presented fair value gap, guys, this is the true value of the day. Okay, very important to understand that. That's the true value of the day. So now that you know that the first presented fair value gap represents the true value of the day, you understand why this PD array is so important, because price travels from one gap to the other because that's the true value for the respective days. And you understand now how exactly price travels between these first presented fair value. So what you want to do is take your fib, put the quadrants on, and then draw from the top of a first presented fair value gap. Anywhere you see a price move, so anywhere you see on your chart a price move from one gap to another, take your fib and draw from the bottom of this upper gap to the top of the lower gap. Okay, draw that range. Okay, we're not using any highs and lows of this price action. We're using just the gaps. Okay, so that's a different way of using ranges. Okay, we're using a range in a completely different way, not from swing high to swing low, but rather the range between the gaps. Okay, you want to put those quadrants on, and now let me calibrate this a little bit. Okay, and now you want to see what is price doing while it travels down. Ignore for a while that this is price action from overnight. I know that, and we will see more examples. But I wanted to show you how price travels. So initially, after we form relative equal highs at the upper gap. So that's the first fair value gap of Monday, 5th of May. We start trading down. We go from first quadrant into the second, leaving a gap, okay, leaving a fair value gap. So let me mark that. And I'm gonna make it red, some sort of red, and I'll remove the middle line for now, and I'm not gonna extend it. So price creates a fair value gap. Okay, here this fair value gap is with respect to the range that we just drew. The fair value gap is in premium. Okay, price action is bearish. This fair value gap forms in premium. There is another one at the top, but that's a breakaway gap. So can price go there? Yes, of course, and it almost does, but it doesn't touch it. Anyway, after we close the first quadrant, we go into the second, then price refers back to this CB, which is in the upper quadrant. Okay, so that's your premium array. Your premium array, guys, is going to form, when bearish, it's going to form in the upper quadrants of the range you are trading. Okay, when bullish, your discount arrays, so your discount fair value gaps, bullish fair value gaps, they will form in the lower quadrants, okay, as price travels up. So here, as price travels down, we go from first quadrant to the second, back to the first, this CB. Then we go to equilibrium right here. Then we refer back to this CB, which formed above equilibrium, and eventually price even reaches higher into this area here, which is few overlapping fair value gaps, but you can use the balanced price range, for example, or just the CB. That's where it's going. And then it melts down below equilibrium again. And as it goes down below equilibrium, look what it forms here. Sorry. Here, it forms another fair value gap. It goes down to the last quadrant, works that level a little bit, and then retraces back up into this CB, which is in premium. When is it doing it? See that? At 10:03, okay? 10:03 p.m. This is your macro, and then price just blasts off down into the Thursday, May 1st, first presented fair value gap. Okay, so let me illustrate with an arrow, with the arrow here. So price is going to travel from first quadrant to the second. It's going to refer back to the first, where there is a premium array, some sort of a CB. Then it's going to go down below equilibrium, back up, another CB here. Then it's going to go down to the last quadrant. And this here, guys, when it goes into the last quadrant, there is two scenarios. One, it may go back up to the third quadrant like it did here. refer to another premium array, another CB, and then down, or it can go straight down. Okay, because many times if it's really bearish into the last quadrant, it's gonna just speed up and it's gonna melt completely out of the range. Okay, but this is what we're seeing here in this piece of price action, which is more typical of an overnight run. Okay, but if you have your morning session, for example, where you have a lot of volatility, then you can expect that this once it gets into the last quadrant, it's gonna start melting heavily. Okay. Anyway, it's the other way around when bullish. It's going to go like this. Okay. Same thing. Once it reaches the last quadrant, it can many times just speed up. And especially if you have here, like here, relative equal highs on top, it will speed up to sweep this liquidity. Okay, so that's how price travels. If you don't believe me, just go on your chart and draw the fib between any two fair value gaps, the first presented fair value gaps that you see, a run between them, and you will see how price does this all the time. You will discover your PD arrays. So look at this, from Friday, May 2nd to Monday, May 5th. Let's draw the fib and see how price delivered. This is the power hour, last hour of the day. So that's the last macro from 3:45 p.m. all the way to 4:14. Okay, here you will see price goes down, then up. Here it refers up into this CB. Then goes down below equilibrium, overshoots a little bit all the way to the last quadrant, but it retraces right at 4 o'clock to another, let me stretch that out, to another CB that formed above equilibrium. So that's your premium array. There is a volume imbalance also here. So you want to draw that out as well. See that? Back into this, and that's 4 o'clock. Then it melts from here all the way down another 35 points and more. Okay, into the Monday first presented fair value gap. Okay, you see how price does that all the time. Let me find more examples for you. What is very important, guys, when you're doing that? Look for relative equal lows or relative equal highs, which formed around the fair value gap that you're targeting, that you're trading towards. Okay, you have to look for relative equal lows. I mean, narrative, guys, that's very important, because sometimes if you don't have the narrative, it may as well stop at the midpoint and then reverse up if there is some sort of relative equal highs above. So that's very important. So always pair it with the right narrative. Okay. Let's see more examples. Let's see where we have a little bit cleaner price action. Let's say 30. This is news, so it's rather aggressive move. So let's see. Okay. Yeah, we had a accumulation of gaps here, so that's we can see more examples here. All right. For example, here Wednesday, I was telling you how you want to be looking at watch this gap in blue, Wednesday, April 30th, and you want to look at the closest in respect to time gap to that Wednesday gap. So when you look down, this is Monday, April 14th. That's 2 weeks ago. So we can delete that or ignore it. I'm not going to delete it for now. We may use it again. Monday, March 31st. That's a month ago. So that gap is rather unnecessary. I'm not going to say it's irrelevant because you see how price works around it, but it's unnecessary for you to find your reversal point. And then also you have April 15th and April 3rd here, which are also Tuesday and Thursday. And you want to be referring back to Wednesday and Friday and Monday, okay? So if you're a bit confused about these things, just watch the previous video, guys. I explained that in great detail. So this is where you find your reversal point here. See that? But before we go to the equilibrium and all this piece of price action forms, there is something very important that is happening again. Price starts traveling down, it goes into the second quadrant and then refers back to the first quadrant where we have what, guys? What do we have here? That's right, it is a fair value gap premium array, okay, in the upper quadrant, and then price goes down. But here in this case, at equilibrium, you have your reversal point, and then price starts traveling up. Okay, as it travels up, now you can refer back. As it breaks structure here, you can refer back to your, let's see, you can refer back to this range here. See how I'm just showing you how price is fractal. It happens all the time, and any range between these first presented fair value gaps pretty much books the same way. Okay, it's a little bit messier here. It's a very small range, so but it still works. Let me zoom in. Price goes up above equilibrium of this range, then it goes down, taps into discount. So that's your discount gap. I like to mark this in green because they're bullish gaps. Okay, this is your discount. This, by the way, is a high probability order block. If you want to know more about this, I'll leave a link in the description. Then price goes up into the last quadrant, then refers back to the third quadrant fair value gap. This is your discount array now for price to continue further up, because we have what here, guys? We have relative equal highs. You have your buy side here. That's your relative equal highs above. Okay. When you see these relative equal highs above and you know price is going to get there, or that's what you're expecting, you can also use that gap. Okay. To see the same thing happening. So from here, price travels back up to the second quadrant, goes down to the first, taps it, goes up above equilibrium, into the first presented fair value gap, goes down. In this case, price didn't want to drop below equilibrium. It rather formed an order block right above equilibrium. This, guys, is super powerful. What else is happening here? Not only we form an order block above equilibrium, which is going to hold price now, it's never going down. Whenever this happens, you know that price is never going down below equilibrium. Okay, it's not going to go down. You can also use this gap as a measuring gap, and you pretty much see that you can target. Let's see, if you're using it as a measuring gap, you take from the range low, and you will want to put your equilibrium line at the bottom of that BC, okay? And then here at the top of the fib, you will have your terminus, okay? This is very, very close to first presented fair value gap of April 2nd, so you might as well want to let that run there, to let price run there, but this can also be an exit. You have an order block here, you have a CB above, so many reasons for price to reach there. Okay, let me just go back a little bit to fix the range that we were working with. Okay. All right, so you see this order block forms, then price travels through the third quadrant and up into the last quadrant here. Okay, you see that line, which coincides with the first presented fair value gap. Then price drops again here on these three bearish candles. And what do we have here? This is, guys, here another discount array. So all these fair value gaps, bullish fair value gaps, they are perfect opportunities for you to scale up or pyramid in a trade. Or if you didn't take a trade already, you can take one here, for example. Okay, target the relative equal highs, and that's it's 55 points. It's a very good trade. 55 points is for any trader, any scalper, is a good amount of points, in my opinion, and it's very quick delivery. Okay, price eventually goes further up, and of course, if you follow time, what time is it? You can hold this all the way to 11:30-ish. So you see here at 11:23 we reach this first presented fair value gap of, there's two gaps overlapping, April 29th. Okay, that's the most recent one. Okay, so that's yesterday's gap. So we reached that at 11:20. So you can expect now some sort of retracement against the morning trend. So this is a reasonable exit if you are using time-based exits. Okay, you also here in this piece of price action where we have an order block and everything, you have a rejection block which eventually we trade to before retracing deeper. You see that? See the midpoint? Okay, so all these things, guys, they blend together. But the most important thing is how price travels between the first presented fair value gaps, okay? And when you have relative equal highs right at the first presented fair value gap, an old one, yes, it's from 3-4 days ago, but nevertheless, when you have that, this is so powerful, and you'll be able to trust these BCs that they will deliver price right where you want it, right here. Okay, this kind of thing, guys, happens all the time, and it's super powerful. You can pretty much see it in any of the price actions in between gaps. You can see that same thing happening. Okay, so just take a random. Of course, you want to have your you want to have a reasonable range to work with, and also you need to have your the rest of your understanding of price action and time in order to fully understand how to trade this. But overall, this is how you do it. And I think it's a very, very powerful instrument to have. Okay. So here you have that particular day, first presented fair value gap, a rather quick, sharp move up. It didn't really give any chance to position yourself using this technique, but nevertheless, if you use the previous day gap, this Wednesday, you will see similar thing happening where price goes up. Then once it reaches the second quadrant here, it taps down into the first quadrant, where you don't really have a fair value gap, but you have this series of order blocks. You have a breaker. Okay, so your initial move here starts with this breaker. We refer back to it, then up above equilibrium, then down into deep discount, back into the breaker again, sweeping these lows. Okay, and then price starts delivering up. Once we sweep these highs, because price wants to continue further up, it has to take discount somewhere. It goes down into the third quadrant here, taking discount right at 10 o'clock, and then continues up. Okay, you need to have, guys, an obvious target, and that's when it works the best. Okay, when you have an obvious target, you can use this technique to position yourself on the right side of the market. And this is a trade I took. It's a paper trade. I was practicing last night at the last hour, and you can see price action here from Thursday, first presented fair value gap of May 1st, all the way to yesterday's first presented fair value gap of May 6th. Okay, another Tuesday. Okay, you will see how price travels down below this first presented fair value gap of Tuesday. I was targeting this piece of price action here, and actually exited a little bit earlier because it was already 4 o'clock. So these two exits that I had, they were time-based exits. Okay. This one was just a partial, like 60% of my order. I exited here. And then the other two, I wanted to leave runners, but eventually I closed them because we were running out of time. Okay, and we were just reaching equilibrium. Okay, so I decided to just close out the full trade, but nevertheless, you can see the same thing happening here. We trade down, back into this first presented fair value gap, then down to the lower quadrant, small little retracement to the order block here, and then price just melted to equilibrium and below, then back up, referring to this premium CB. It actually reached all the way up to the first quadrant here, but didn't have enough power to push through and reverse. And then this is what I'm telling you, guys. When it's in a hurry, you will see, once we break again below equilibrium, you will see speed. Okay, before any retracement to the third quadrant, you will see speed all the way through the last quadrant and will close the range. Okay, and then eventually it retraced, and then right at 6 o'clock when we opened today, we just saw a massive pump. It was like a 300 points pump. Okay. But anyway, I hope you guys see what I'm trying to show you because it is a very, very powerful technique, and if you practice it enough on your charts, I'm sure you'll find amazing setups using this technique. Okay. I'm just trying to see if I can find another good move here. But I'll need to rewind the chart. Wait, I'll use market replay to go a little bit further back. Okay, so we can see another delivery. Okay, of how this thing works. So let's see. I'm seeing this piece of price action here. So from today's gap all the way down to Thursday, April 10th. See that? We go down to the lower quadrant, then we refer back into this premium array. I'm not even talking any narrative here or anything like that. Just showing you how price travels between these gaps. That's your launch macro, by the way. So down to the second quadrant, then it goes back up to premium array to the first quadrant, then down right at equilibrium, it turns gears, goes back into this CB one more time, which is a stop hunt, which gives you additional confluence here that we are going to. What is IST always saying? The most powerful moves happen after stop hunts. Okay, so stop hunt, then down back into this equilibrium. Whenever this candle prints here at 11:45, look how it goes. Let me zoom in. Look how it goes one tick into the first quadrant, into this discount array. Okay, one tick, and then it melts. This is a perfect opportunity for you to trade it all the way down. That's sorry, I'm a little bit sloppy with the mouse today. That's all the way down 155 points. Okay, rips through equilibrium, takes another premium here. Okay, actually reaches into the order block, but nevertheless, that's your premium CB. Goes down, reaches up to this order block again, melts. And see these guys, this is what I'm telling you. Once it goes to the last quadrant, it just keeps dropping. It doesn't want to refer back to this one. And also, you will see that in this third quadrant, you don't have any CBs. Okay, there's no CBs, there is no inefficiencies, so price has no reason to go there before it closes the range. Okay, once it closes the range, market structure shift here, and then we start delivering back the same range. So your market maker buy model starts here. Okay, so let's see with the market maker buy model. Very, very strong aggressive move all the way up above equilibrium. Then we go down to this discount BC now, up into the third quadrant, then back down into discount below equilibrium. You also have another small little BC here. It's actually really, really small. And you have actually another one right here. So let's use that one. That's what price referred to. Okay, then we go up and eventually close the full range. Okay, see guys, it does this on the way down, it does the same thing on the way up. Okay, the same thing, but this kind of stop hunts, they are nasty. Okay, 1 o'clock. These are very nasty, but you have to live with that. Depending on when you positioned yourself and how quickly you trail your stop, this might stop you out, but it is what it is. Anyway, guys, please try to do this thing on your charts. Mark the first presented fair value gaps of the last 2 weeks, for example. And then any move in between the gaps, try to put the fib between these first presented fair value gaps and see how price traveled around them. Okay. If it travels with speed and disrespect the range, for example, you have this range. If price just travels with speed, totally disrespecting this range, you will know that most probably your reference point or this gap should be further up. Okay, you should probably use a gap that's further up. So what do? You just look for relative equal highs. Okay, if it's bullish, look for relative equal lows. If bearish, but as an exercise, do it over a past price action where price already booked, so you will develop an eye for it. Okay, and also look at this 1250. Look at these taps to happen during macro. That's when it's most powerful. Okay, when it goes down to discount when bullish, look for the macro hours because that's what gives price rocket fuel. Okay, you will notice that it just works. Okay, here another macro above equilibrium and then it melts. Anyway, guys, if you're new around here, hit the subscribe button. Help me grow the channel with a community of dedicated ICT traders. And love and respect for each one of you. Thank you for the support. And I'll see you guys in the next video.